Hi, in the previous video we discussed insurance a bit. We defined insurance and I gave you a small story of an experience where we felt like insurance did not come in when we needed it. In this series we're going to define insurance, and as we define insurance you'll understand why that claim was handled the way it was handled. My name is Alice Yaga from the Potter's Touch Insurance. Karibuni. So we'll start by defining insurance in itself. Insurance in a nutshell is transferring a known risk from yourself, the person who's going to be insured, to an entity which we call the insurance company. There's a reason why we say a known risk, because the moment you know this risk exists, then it becomes a totally different thing. It's not what insurance automatically will take it up. Yes, they would cover it, but there are terms as to how they cover that. And when we go through this video, you'll understand what I mean by when it becomes known and how it is handled. Second term we're going to define is premium, which is a cost of insurance. When you're buying insurance, the fee that you pay for insurance, we call it premium. Premium is usually determined by the risk we are taking. The higher the risk, the higher the cost of insurance, and so the higher the premium. The third term we're going to be defining is what we call pre-existing and chronic conditions. Pre-existing in a nutshell is any condition you have before buying insurance. This could be illness, it could be an accident. As long as it existed before buying insurance, we call it pre-existing. The second term that goes with pre-existing condition is chronic condition. So chronic would be any disease that someone is treated for more than 3 months and it's recurrent. So in insurance in general, pre-existing and chronics are handled the same way. The third term we're going to be discussing is what we call excess and deductible. Now, pre-existing and chronic are often found in the medical insurance. Excess is in insurance in general, whether motor, whether property. Excess term, you'll find it quite a bit in insurance. And what does excess mean? Excess is a portion of the claim that you, the insured, bears. So whenever you buy insurance, there's a certain amount that you usually take care of it yourself. So excess in motor insurance is usually 0.25% of the vehicle value. So if you don't want to pay that excess when you have an accident, there's an option to buy back that. We call it buying excess protector. So most of the time, if you don't want to again incur cost when you already have insurance in place, we tell you to buy excess protector. The third term we're going to look at is copay. Copay also is found in medical insurance. So copay is where when you go to hospital, there's a certain amount of consultation that you, the client, also takes care of. It's different for different insurance companies and for different hospitals. For the top tier hospital, the tier 1 hospitals, usually it's a bit higher, and for the other hospitals it's a bit lower. The reason why this one is usually put in place, it's actually good for you, the client, because it will reduce the claims you have by avoiding the high-end hospitals. And as your claims are lower, it also means your premiums will not be revised significantly on renewal. So actually having copay in your cover is not a bad thing altogether. For corporate organizations, for schemes, you can actually decide not to have copay, meaning you pay slightly more when you're buying insurance, and then copay will not be applied in your cover. The final phrase we're going to discuss is waiting period. So waiting period usually applies in medical insurance and specifically to illness. When you buy insurance, you'll notice that sometimes you're told you'll only use your cover after 30 days or after 60 days when it comes to illness hospitalization. That is what we call waiting period. For accident, cover is immediate. Once you've paid your premium, you can use your cover. So the reason why I've defined all these terms, whenever you have had insurance and you felt like they didn't come through for you, it's probably one of these that has applied. If it's a pre-existing and a chronic condition, insurance will cover to a sub-limit. So as much as you have a bigger cover, please always understand what your limit is for pre-existing and chronic condition. If it's a waiting period issue, it means that you probably have bought cover, you have not finished the waiting period, and you need to use the cover. The insurance will decline paying at that time, but when the waiting period is over, then that condition will be covered. Then copay, if you're going to a hospital that has copay, you'll be required to pay for that amount before you can access the service. So many times these are the reasons why insurance will pay to a sub-limit. It's not that they're refusing to pay, but these terms are usually spelled out when you're buying the cover. And finally, excess. Excess is also a part of the general insurance where you're supposed to take care of it. You need to understand how much that is so that you decide whether you want to take a way out by paying slightly more, or you'll have the cover with excess, and whenever there's a claim, you understand that you need to take care of that. Thank you, and continue subscribing to this series to understand more about insurance.